Welcome to today's market report.
European stocks stayed near record levels on Wednesday, helped by energy and consumer stocks, while strong economic data from the United States and Europe buoyed investor sentiment in a mostly quiet day of trading. The Pan-European Stoxx 600 index traded 0.3% higher, holding just below its all-time high hit in the previous session. Data showing a strong expansion in the US and European factory activity in May lifted world shares to fresh highs on Tuesday, with investors awaiting US jobs data on Friday for confirmation of a solid recovery in the world's largest economy. Oil and gas stocks rose 0.9% to lead sectoral gains in Europe as crude prices extended gains after OPEC and its allies stuck to their plan to cautiously bring back supply to the markets in June and July. Stocks considered more stable at times of market uncertainty, such as food and beverage and real estate, also found favour while tech and miners gained. Worries about rising inflation triggered a bout of volatility in markets in May. However, investors have taken comfort from reassurances from the US Federal Reserve and European Central Bank policymakers about the price rise being transitory. Central banks face a balancing act in preparing markets for an unwinding of emergency measures. We expect this to happen in a controlled fashion over the summer, while we acknowledge the risk of communication accidents amid overheating concerns in the US, according to Generali Investments. Data on Tuesday showed Eurozone inflation accelerated to 2% in May from 1.6% in April, driven by higher energy costs to above the ECB's aim of below but close to 2%. Swedish truck maker Volvo rose 3.5% as its board proposed that the proceeds from the sale of UD trucks be distributed to shareholders. Danish luxury TV and stereo maker Bang & Olufsen jumped 9.6% after providing a upbeat full-year earnings forecast. German broadcaster ProSiebenSat.1 Media slipped 4.2% after Chief Executive Officer Rainer Beaujean said it does not need any help from outside amid calls to consolidate the European broadcasting industry. Crude was up 1.54% at $68.76 per barrel. Brent was up 0.07% at $71.30 per barrel. Gold futures was up 0.31% at $1,910.95 per ounce. On the FX front, GBP/USD trades cautiously above 140-150 on Wednesday. The pair licks its wound after falling sharply from highs of 142.48 in the previous session. A negative divergence in momentum oscillator throws caution on aggressive bids. Initial support is seen at 141.23, according to Commerzbank. On a daily chart, the pair has been facing a stiff resistance near the 142 mark. The double top formation in the vicinity of the 140-45 area makes it harder for GBP/USD to continue with upside momentum. The bulls therefore experience corrective pullback on the premises of double top, a bearish reversal formation. The GBP/USD price is then likely to test the 23.6% Fibonacci retracement, which extends from the lows of 136.69 level at 141. The negative divergence in the relative strength index indicator implies a significant downward reversal in price. In doing so, the bears would march towards the 50-day simple moving average at 139.30. Charters that Brexit led to £110 billion loss to the US service exporters, per the research from the Austin University in Birmingham, marked flurries over indecisive talks between the EU and Britain over the trade deal. On the same line, the Daily Mail came out with the news saying the EU's ambassador to London stoked a row over Northern Ireland, insisting there is no alternative to the protocol that unionists want to be scrapped. It should be noted that the launch of the UK's post-Brexit Independent Trade Authority on Tuesday is cited as a risk to the EU, as the trade body can now levy sanctions on the bloc if needed. Eurodollar is clinging to the 122 area after an upward move on Tuesday as inflation moved to 2% in the Eurozone. The dollar index was up 0.1% at 89.935 after dipping as low as 89.66, approaching the lowest since January the 7th at 89.53.
This is today's market news. Thanks for listening. We'll see you next time.